What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Happy Monday. Hope you had a good start to your week. Today is Bitcoin Fundamentals Report Day. Every Monday, I put out the most comprehensive free Bitcoin newsletter at bitcoinandmarkets.com. We cover all sectors of Bitcoin, and then I live stream it and talk about it. So let's do that. Let's jump right into it. Let's share the screen. bitcoinandmarkets.com. Get this sorted out. There we go. There. Okay. Refresh. I am live streaming on YouTube, Rumble, Twitter, and Telegram. Twitter gets the most concurrent viewers. So if you guys want to jump over to YouTube and Rumble, like, comment, subscribe over there. I will be checking comments throughout the day here. Michael Tenney, what's up? Thanks for joining. All right, let's jump into this Bitcoin Fundamentals Report 307. We are, going to be talking about the SEC battles, really the Congress testimony, Chinese stimulus, FTX price analysis, ETF inflows, mining sector update, all this stuff. This newsletter is a recap of all the sectors of Bitcoin, as you can see here in the quick navigation. All the sectors of Bitcoin over the last week, the biggest stories, and we go through all of it. So also, if you guys would like to support independent content, I've been doing this podcast, live stream, community, writing, all this stuff since 2016. I appreciate everyone that supports the show. I cannot make this show without your support. So if you want to join for $5 a month, you get some perks like right now, tomorrow is the end or the beginning of October. It's the end of September. And we will be starting our October price forecast competition. That's where for $5 a month to be a member, you can have a little friendly competition, try to forecast the price for the end of the month. And the winner gets $20 in sats over the Lightning Network. So it's pretty good deal. All right, snapshot of Bitcoin. Weekly trend, we're bullish in general. We're bullish. We've broken through the 50-day. We've broken through the 200-day. We're moving up to the top of all these different patterns that we've been watching over the last few months. So overall, the market is very, very bullish for Bitcoin right now. And media sentiment is positive, not quite as positive as it has been like a couple months ago, but right now it is still positive. Network traffic is very low. We'll go over the mempool. Mining industry has low revenue. We'll go over hash rate and difficulty in the mining section. Price at the time of writing, 63,408. If I just would have waited a little bit, we would have been right now we're at 63,700. So if I would have waited just, another hour to publish, this would have been green because it was only $50 difference from the last issue. So this is not a weekly candle or anything. This is just issue to issue. What we have done, pretty much flat. Market cap, 1.2 trillion. Satoshis per dollar, 15.77. One finny, that's 1/10,000th of a Bitcoin. That is my beloved unit. I'm trying to have it catch on, is $6.34. Mining sector, previous difficulty adjustment was last week, went down 4.6% on a difficulty. Next difficulty adjustment is right now estimated at negative 2.5% in 9 days. We'll see where that ends up. Mempool back over 100 megabytes at 106 at the time of writing. Fees for the next block, 36 cents or 4 sats per virtual byte. And the low fee was 27 cents. Lightning Network capacity went up by 0.5%, 27 Bitcoins in capacity, 5242. Channels, however, dropped 0.3%, over 100 channels on net closed on the Lightning Network, 48,419. All right, let's get into the main headlines for Bitcoin. Congress promotes scams. Oh, man. So if you guys aren't familiar with my content, this is going to be an unpopular position, but I give it to you real. What I'm seeing as quote unquote OG in the space. I've been around for more than 10 years now, watching Bitcoin, studying Bitcoin, talking about Bitcoin. Libertarian slash crypto anarchist slash realist here. But this stuff that's been going on in Congress last week with Gary Gensler, everyone was like, oh yeah, they're grilling him. They're grilling him. Well, I wrote about this last week and I was like, this is not good. Okay. Politicians are politicians. They're dangerous too. So let's see what I wrote here. My position on this is unpopular. I understand that, but I hate fraud. It is popular to hate Gary Gensler, but I think he's not a bad SEC chairman. All these scams are securities. As Gensler appeared in Congress to testify, members of Congress took turns grilling him for political capital. The Howey test is very clear, and this is linked to what I wrote about last week, going through the Howey test and why these things are securities transactions. But members of Congress have either bought into the gaslighting of the industry, the Brian Armstrongs of the world, the Vitaliks of the world, all of the pump and dump scammers. They are just gaslighting their way, trying to make them not have to adhere to the Howey test, even though they should adhere to the Howey test. Or they have accepted campaign contributions from these groups. I mean, the big crypto fund is one of the largest fundraising groups now. So if they are taking funds from this group, they are going to be grilling Gary Gensler that's standing in the way of quote unquote crypto, all the crypto scams. I put some of these in here. I don't know if they show up on the email. They probably don't, but you guys can just go to the website and watch these little clips. I talked about them last week. Don't forget, these are politicians. With very few exceptions, they are not particularly fighting for your rights. Altcoins are securities. They fit the definition. Consumer protection would be served best by financial disclosures. And I worded this carefully because I don't like shoulds. I do not like shoulds. They should do this. They should do that. So I think if the goal is consumer protection, which even like the libertarians out there or the crypto anarchists out there, they, the ANCAPs, they want consumer protection. I'm sure they want to protect against force and fraud. They just think the unhampered market will do it best. And I tend to agree with that in a perfect scenario. Okay. Now, short of that perfect scenario, it will, consumer protection right now will be served best by financial disclosures that you have to do if you register as a security. So you can understand which VCs are backing it. If this guy has been involved in another scam and now he's doing a brand new scam, how much were they given in pre-sales, token distributions prior to launch and things like that. So we'll know who's involved, what their kind of business plan is, and all of that. So I think it would be best if they had these financial disclosures. Okay, Bitcoin is different though. There's no one to produce the financial disclosures. That's why I shared the meme in Telegram earlier where it was showing Bitcoin and then what was it? Let me look that up. So it was okay, so spot the difference. Can I bring this up? Well, I'm not going to waste the time. Bitcoin discovered how to get rid of third parties, and now crypto, quote unquote crypto, is reintroducing third parties, but with a blockchain. That meme sums it up perfectly. Okay, so let's continue here. Moving on to the next story. BNY Mellon gets exemption from SAB 121. So everything looks official. BNY Mellon is going to be able to custody Bitcoin. They have cut a deal with BlackRock. BlackRock's going to be diversifying away from Coinbase. So there's all this conspiracy stuff about manipulation in the market, and Coinbase is going to, is just all paper Bitcoin. And now they're going to have to source this Bitcoin to give it to BNY Mellon. I did see a couple tweets about people saying that they're unable to withdraw from Coinbase right now, or that there are restrictions put in place. I don't know if that has anything to do with it. The timing is interesting, but we'll have to wait and see how that develops. I tend to just not believe any of that, that there is no massive, omnipotent manipulation. It's very, very risky and very, very illegal. And so I don't think that's happening. But let's read from this Watcher Guru article. This is what it says. The SEC has approved the New York Mellon Corp, BNY, custody of crypto assets beyond crypto's ETFs. Oh, God, man. So you're using crypto twice in the same freaking sentence. Gosh, why can't they just use Bitcoin? SEC Chair Gary Gensler revealed the revelation Thursday following a speech in front of the Fed of New York. The BNY Bank controls $2 trillion in Bitcoin and has now been approved by the Securities and Exchange Commission to offer Bitcoin custody services. The services that BNY currently uses to offer its Bitcoin custody services already include Bitcoin and Ethereum ETFs. However, the bank recently presented a plan to the SEC's Office of Chief Accountant to custody these two assets in a way that would protect customer funds in the event of bank insolvency, so in allocated accounts. The SEC granted BNY with a non-objection to the plan. This is the same way ETFs get approved, actually, so they don't get denied. Well, they have to get denied, or they are automatically approved. So this is a non-objection. So it would be a non-rejection for the rules change that allow ETFs to be listed. Anyway, just a little inside baseball. Operation Choke Point getting confirmed. And actually, I said Operation Crypto Choke Point getting confirmed. So we've talked about this on other live streams last week and months prior. But this was an interview with Marty Bent and Caitlin Long. And I really respect both of these individuals, so have nothing against them. But she didn't mention certain important things during the interview, specifically those who failed from this were complicit in crypto scams. Her bank survived, and I'm glad, but she is likely Bitcoin only or very close to it. So isn't it funny that the only Bitcoin only bank that was involved here survived? That would be important to note. Now, I do not support government overreach at all or infringement of rights in any way. But it is very important to consider in the same conversation that these banks which facilitated fraud, or these were banks which facilitated fraud on a massive scale. So we have to put it in context. We can hold both ideas in our heads at the same time. We're big boys and girls here. Okay, so yes, the government should not infringe our rights. But at the same time, these were fraudsters. These were scammers. And they went under. Notice Caitlin Long, not a scammer, not a fraudster. She survived. Okay? So we can consider both of these arguments at the same time. It doesn't have to be one or the other. They got mixed up in dangerous things, and the government was wrong in this case. So both of those things can be the same, like happen at the same time. It hides one half. It hides one half of the story that is immensely important to tell. So if you hide it, that these guys were scammers, and that's why they failed, you leave out that educational opportunity. Well, why were they scammed? What are you talking about? Oh, now you open up the door to teaching people about why these are scams. And if you don't mention it, people will tend to let it slide. Let all of this fraud slide. And yeah, maybe I'm just one tiny content producer that's out there yelling in the wind about this. But it is immensely important that we highlight that these guys committed fraud on the billions and billions and billions of dollars scale. And that is one reason that led to their demise. Okay, moving on. FTX distribution starts soon? Question mark. There's lots of rumors of FTX distribution starting tomorrow, but I have been unable to find a legit source. Their latest press release sets October 7th as the day of voting, but fuck, I didn't finish that sentence. But you see, here's a clip, snapshot from their latest press release, and a link to that press release so you guys can go find it. Oh, I know what I was going to add here, and I freaking forgot to do it. So let's go into this. I'll bring it up. I should just add it in there. You guys are seeing how the sausage is made back here. Okay, it was a tweet from Sunil Trades. Don't know this account, but let's see what they say. FTX distribution false. Large accounts spreading false info. FTX distribution. Oh, am I sharing this? Good Lord. Man, it's like I just started streaming. Okay. FTX distribution has started and or starts on October 1st. 16 billion inflow. But the reality is October 7th is their planned hearing. Approximate numbers here that this guy has for flows. Estimated 5.5 billion claims bought, not crypto investors won't reinvest crypto. Okay. So the way that this is, he's probably ESL here, but the way I understand this is that they have these claims collectors or whatever. You can sell your claim to these people for usually pretty high percentage of the settlement value. So let's say you're supposed to be getting $1 million back, you could settle for 900,000. So they buy your claim from you. So that's what they're saying here is that estimating that 5.5 billion were bought. And so these people are not necessarily crypto investors. That's kind of a reach. I think some of them could be crypto investors. I mean, at this point, they're probably as likely to be crypto investors versus non-crypto investors, but whatever. I think that's a little bit too broad of a brush to paint this. The claims under 50K distribution end of 2024 possible ? So smaller claims could be seeing their distribution by end of 2024, but most claims above 50,000 Q1 of 2025, Q2 of 2025, 70% to 100% plus of petition date value. If 100%, 5.5 billion claim buyer, 5.5 billion original holders. Okay. Remaining recovery over next 2 to 3 years. So bottom line is this is not happening this week. It's going to be happening. I think this is a little bit, this is a little bit too broad, and this is probably a little too slow. I bet it will happen faster than that. I would say most or all the distributions by the end of the year. But yeah, not all of it's going to be coming back into Bitcoin. But even if 10% does, that's over $1 billion. And if 20%, maybe 50%. So this is a big number. Okay, so that's all I have for that. Let's go back to the report. So just pretend that was inserted here. I might go back in and put that in. Everything is a security ? With all the excitement in Congress last week, this case received a visceral reaction. The headline is extremely misleading. So the headline is, crypto mining boxes are securities, court says in SEC case. So reading that, you think, oh, the SEC wants to make everything a security. But that's not what this case is about. It's a misleading title. This was a cloud mining scam. And if you've been around in Bitcoin, these cloud mining scams were quite popular early on. So going back to like 2014 through 2016 or so, there was quite a few of these cloud mining scams. They weren't mining Bitcoin. It was a Ponzi scheme. They took money from new investors and rolled it out to old investors. They also had their scam token. They had their own token that they were pumping out there. So it is alleged in Ponzi style, it is alleged defendant Green United LLC was making money from new clients and paying existing clients, and they weren't mining at all. The boxes were fictitious. So crypto mining boxes are securities. Well, those boxes are fictitious. So what is the security? It's the transaction being made. Okay, this is securities transaction. They would fit as securities transactions because they were an investment of money into a common enterprise dependent on a central party with the expectation of profit. Close and shut, in my opinion. They could have operated, they just needed to file the proper disclosures. Again, the disclosures. So, yeah, they could have continued to operate. They could have run their business, their Ponzi business plan, but they should have filed the proper disclosures to tell people you're a Ponzi. That this happens like in other countries, I think in Russia, maybe some Central European type countries, Ponzi's are quite popular, and I think they're legal, but everyone knows they're Ponzi. Okay, so you can operate your Ponzi. You just have to tell everybody that you're a Ponzi, but that would have exposed themselves. Okay, next headline. This is going into the macro section. Let me check comments here. Jason F., thank you, sir. Welcome. John Delaney, what's up? Guys, like, comment, subscribe. 117 people watching. If you're watching over there on Twitter, I think you can make comments there, but it's easier if you jump over to YouTube and Rumble. Those links are in my pinned tweet, so you can find those. Like, comment, subscribe over there. Helps the channel grow. Okay. Let's move on to the macro section. So China fires stimulus bazooka. And I went over this last week. This is Jaron Blockland. And basically they lowered interest rates, not all interest rates, but they lowered several key interest rates set by the People's Bank of China. They cut rates on over $5 trillion worth of mortgages. And I read today that they simply told the banks, let's say you have an existing mortgage on your property for 20 years or 30 years. Well, I don't know what the normal term is over there in China. Maybe there's even 50-year terms. I don't know. But so what they'd say is, okay, their rate is locked in at 6% or 7%, lower it to 5%. So they're having to go through all of their loan book and mark everybody down. What does that do to the bank's revenue? What does that do to their business? It's going to screw them over big time. That is income for the banks. This is going to cause massive bank failures. This is going to go from a real estate bubble failure right into banking. All these banks are going to be, regional banks are going to be gobbled up by the big national banks. It's totally going to centralize. That's what I see happening just from this one alone. Eased rules for second home purchases, lowered the required reserve ratio for banks, freeing up fresh liquidity. Not necessarily. So if you lower the reserve ratio, you're expecting banks to go out and make loans. But what if they're not making loans because they don't want to make loans? Not because of any reserve ratio. The reserve ratio, at least in the United States, doesn't matter. They don't check their reserve ratio before they make a loan. There's been studies of this. They go in, they take out a loan, and they watch and see what happens on the back end in the approval process for the loan. They never check their reserves. They never check their reserve ratio. Do we need to mark down our reserve ratio now because we gave out a new loan for $1 million? No, they don't do that. It's complete garbage. Does China do it? Maybe. But what if you're not lending because the economy's trash? And there's no good risk out there for people, no high quality borrowers. You're not lending because you don't want to. So these reserve requirements probably don't matter. Pledged over USD 100 billion in equity market support, and we have seen the outcome of this already. Stated policymakers were studying a stock market stabilization fund. Okay. This is out of character for China, but the gravity of their situation might have finally dawned on them. So why would they do all of this? This is not like them. Usually they cut interest rates, then maybe 9 months later they'll do some sort of second rule change, and 6 months later they do another rule change. They've never come out like this, guns a-blazing with the stimulus bazooka. This is way outside of character. And if China is growing so much at 5% or whatever they claim, why do they need this? The Shanghai Composite was stopped today for volatility to the upside. It was the biggest or the best day for Chinese stocks since 2008, with some indices up 30% in a week. Many market pundits are saying this is going to bring China back. Of course, if you know my content, you'll understand that China is not coming back. This is a temporary euphoria. But once it sinks in that this stimulus was quote unquote needed because the economy was so utterly bad, markets will roll back over again. Most people get the question backwards. They ask a future-oriented question about what the stimulus means for future performance. Instead, if you're trying to analyze these markets correctly and make semi-accurate predictions, they need to first ask the past-oriented question. How bad is it that made them provide this unprecedented stimulus? This is not a real rally, and it is unsustainable. Look at this. Bam. That is not sustainable, guys. That's a fake market right there. Completely fake. Okay, next headline here in macro. Saudi Arabia to drop $100 crude target to win back market share, FT reports. This is Reuters reporting on an FT article, but I just snapped this cover image. Saudi Arabia is preparing to abandon its official $100 a barrel oil price target as it gets ready to raise output to win back market share, even if it means lower prices, the Financial Times reported on Thursday. So I've been talking about this for a long time, okay? They basically put in very close to 6 million barrels per day of production cuts. And now, not Saudi Arabia alone, this is OPEC plus. And price is still under 70. Now they're talking about bringing all of that back online. And what's going to happen to the price of oil? We also have regional war possibly breaking out in the Middle East, and oil is still under $70 a barrel. What does that tell you about demand for oil right now? It's through the floor. This is why peak oil demand is the correct theory, not any sort of peak cheap oil. And this linear thinking about every year the world's going to need or consume maybe 2 million or 2%, 2 million barrels or 2% more every year, year over year over year. That type of thinking is dead wrong. What happens when the population gets cut in half over the next 75 years? We're going to be consuming half or less than half, probably 60% less. So only 40% of the oil with half of the population. Maybe even less than that. But we know how to pump out of the ground about 105 million barrels a day. What happens when demand is only 50 million barrels per day? Price is through the floor. So we have hit peak oil demand or very near it. And the longer term trajectory for price is lower. Let's continue reading. However, prices are down nearly 5% so far this year, amid increasing supply from other producers, especially the United States, as well as weak demand. Weak demand growth in China. Earlier this month, OPEC Plus agreed to delay a planned oil output increase for October and November. Okay, so we talked about this. I didn't know it was delayed. It was supposed to come online September. But then they delayed it to October, November, after crude prices hit their lowest in 9 months, saying it could further pause or reverse the hikes if needed. The Financial Times, citing people familiar with Saudi thinking, reported that Saudi Arabia is committed to the group raising production as planned on December 1st, even if that means a longer period of lower oil prices. Guys, this is going to make oil drop further. I don't know how anybody can expect anything different. And Saudi can take oil out of the ground at $10 a barrel. So, it can go really far down. Okay, significant downside risks to oil in 2025. Peak oil demand is starting to catch on. Second oil story here. This is from Zero Hedge. You can see the very first words of this article: demand weakness. It doesn't say cheap oil is gone, only expensive oil is left. No, it says demand weakness. Okay. This is going to continue happening. And this article is full of all of these banks, JP Morgan, whatever, Goldman Sachs. They're all talking, they've shifted their outlook for oil in 2025 lower. Okay. All right. Next headline, Q2 GDP revised a little higher. There are significant problems with GDP. And like CPI, it should be the focus of some private groups to reformulate how it is calculated. We talked about this last week. GDP had for Q2 of this year was revised for its third time, and it was revised a tiny bit higher. I think 1/10 of a point higher, annualized. So that would be 1/4 of a point higher for the quarter. But it's a flawed metric, and we talked about this in depth. I even mentioned that, hey, there's a lot of different CPIs, shadow stats. There's PCE, CPI, core, super core, sticky, less shelter. However you want to measure this, you have Chapwood Index, you have Truflation, you have all of these other kind of third-party measurement tools. You don't have that for GDP, really. So I would like to see, excuse me, I would like to see a Chapwood Index or a Truflation for GDP. True GDP. Instead of real GDP, it's true GDP. That would be cool to see. And they could, reformulate how it's calculated and test it against reality, make predictions from it, and see if they, how they work out. But I think that's an underutilized or exploited type of measurement that I think people would really, really like. If there are things like this out here and I'm not aware of it, please pass it on. Next quarter is going to be the really important one for me. Last year, Q3 was 4.4% annualized. If it is under 3% this year, that will be a significant sign of deterioration. So we kind of talked about this a little bit. This isn't reacceleration. I mean, this is lower than Q4. It's lower than Q3 last year. It's lower than one of the quarters in 2022 even. So this isn't showing like any reacceleration. And if there's a problem with this, if GDP is not being measured properly and there's some accounting kind of funny business going on in the background by the Biden administration, this could be 2%, and that would obviously be a down trajectory. Okay, so next month, if it comes in below 3, and last year was 4.4, that would confirm to me, at least directionally, we're going the right way. One thing you can do here is, if you don't want to consider the absolute number, like you don't believe CPI, okay, that's fine. But at least you can get information directionally. Where is it heading year over year directionally? Okay, are we going into disinflation? Are we going towards more higher prices? So that is how you can use it, even if you don't like the way it's formulated. Okay, so that is it for macro. We're going on to the price section next. Let me see if there's any comments. Not seeing any comments over there. Let me check here in Telegram. I am live streaming on YouTube, Rumble, Twitter, and Telegram. If you're on Twitter, which most of the live viewers are, jump over there to YouTube and Rumble, make a comment. I would very much appreciate it. It helps the algorithm and just interaction. Like, I'm here for you guys. This is, in the world where there was some stat I saw where like the average guy does not have a single close friend or something like that. We are in this Bitcoin thing. We can find a good community that we can talk about things. The Telegram group is not solely Bitcoin. It's all sorts of macro stuff. I've also posted pictures of my chickens in there, and we've had different conversations about things. And so, just join the community, come in with like-minded people that are here to learn and talk about Bitcoin. And that's it. All right. We got one. Facey McFace. Just a thumbs up. All right. Last chance to check comments before next stoppage. All right, let's move on to price analysis. Of course, I have a premium Market Pro that you can sign up for. $15 a month for this one. It's very, very reasonably priced for the analysis that you get compared to other people in the industry and even in macro, like other private proprietary outfits. But anyway, check that out. That is Market Pro. It's the professional tier. Okay, Tom Lee said this week, many investors have decided to wait until after the election to deploy capital. I thought this was an interesting tweet. Made me think. Okay, so I wanted to include that here up front. Bitcoin charts. Last week, I expected breaking the 200-day to send us much higher. However, I was not looking at the channel and megaphone tops until later in the week. On the professional tier, I did look at this closely, went into like in depth that why we were pausing here, but what was going to happen after we broke out of this. And so, but on last Mondays, I was not looking at the channel and the megaphone. These can be powerful shelling points and did cause price to stop and now retest the 200-day from above. So here is this chart that I included, retesting the 200-day from above. We'll see what happens. But breaking out, this is the red is the megaphone, obviously, and the gray is the channel. Bull flag. Once we break this, where we go from here, I cover that on the professional tier. But let's take a look at the live price. All right, so we have the 200-day moving average right here. We are above it actually right now. 200-day is at 63,720, and we are at 63,728. So we are back above the 200-day moving average. I think we will I think we'll close above it for a couple reasons. One is the S&P 500. It came charging back today at the end of the day. If we go down to the hourly, you can see that it was down pretty heftily in the last 2 hours. Just boom, boom, smashed its way back up higher. And so I think Bitcoin can close over that 200-day, which would be a very big sign of strength, in my opinion. Be very good there. Okay, so that's the Bitcoin price. Let's go back to the report. Saw a message come through Telegram here. Facey McFace. Yeah, waiting for chick pics. Oh, man, I shared them back, I don't know, probably because I got them about 6 months ago now. So I built the coop, I built the run outside. And yeah, so I shared that maybe, right around 5-6 months ago. So you can scroll up and find that. Not the best stuff in the world. Somebody else in the group, who was it, had this beautiful piece of land and they posted their chicken coop. And it was like, I think did they say the Amish? It was made by the Amish or something like that. But oh my gosh, was it gorgeous? Made me jealous of his chicken coop. I mean, it was a big one. Like the chicken coop itself was probably uh 6 by 12 feet. So anyway, yeah, we talked about that stuff. Um okay, let's get back into it. So we have that chart. Several commenters in Bitcoin are claiming we will not break out until the election is over. The one I'm kind of like really thinking about when I wrote this was um, Joe Carlaseri, but also Tom Lee. You know, he's saying people are waiting until after the election. While I agree that this particular election is quite tense and many people will wait, the jury is out whether or not US elections have an effect on the Bitcoin price. I wrote about this too several weeks back when that chart that when it made the rounds of showing the US elections and what happens after US elections to the price. Well, I went through and I said, okay, well, elections happen in halving years as well. So let's compare it to halvings. Actually, the halvings are much more correlated to price action than any sort of US election. So that's what I'm talking about here. I wrote about this several weeks ago. I'll link back to that where I looked at timing. It seems the halving is still the overwhelming factor, or at least the timing milestone. Therefore, I expect Bitcoin to have an excellent October. ETF flows. ETF flows have continued to skyrocket higher. Last week was huge, breaking the previous cumulative all-time high up to 18.8 billion. They bought 1.1 billion last week alone. Price continues to lag ETF flows, but we should expect it to catch up. You can see right here last week, zipped up here 18.8 billion in total cumulative flows, and price is not showing today, rolling over here back down to 63. But yeah, there you go. Today will be an important day for flows. As I've observed before, it is the rare days of decoupling or divergence that is a signal for directional price movement. For example, if today's flows are positive, but price ends negative on the day with a pretty significant negative candle, that would be a very bullish sign for price. And I went back here and looked at all of these different areas where there was positive flows but negative Bitcoin price. What happened? And every single time the price went higher afterwards. So that's what we're looking at. Heat map. Heat maps are interesting. Below, we have different time frames. On a 24-hour time frame, liquidations slightly favor a rise in price. So here we go. It's different now. At the time of writing, this is what it was. There was some down below, liquidity down below, but the liquidity up above was actually pulling in that direction, just above 64,000. And then you have this area up here. And my head's in the way. Let me see if I can change that. We'll do this one. Yeah, that's okay. So that's the 24-hour heat map. And then, however, if we go out to the 1 week, it leans slightly bearish, in my opinion. So this liquidity here is closer than this liquidity up here. So price, this would tend to make you think the price is going to go down into this area first, then back up to this area. So I said slightly bearish. However, on the longer term time frame of 6 months, there is only one direction, and that's bullish. You can see this. It's upwards of 20 billion in liquidity up here. So price is going to seek that out for sure. It's just a matter of how soon. Okay, overall, the weight of fundamentals and price pressures are upward, but near term is more balanced than it has been the last few weeks. Bears are fighting to not be liquidated at 70,000 and decided to defend the top of the pattern. So here is all of these guys up here at 70,000 that's going to be liquidated. They're like, oh crap, we better not let that happen. So they are trying to push the price down. Okay, breaking the 200-day to the downside, raises the risk of testing lower levels again. But like I showed, we probably will close the day above the 200-day moving average. Okay. I think that is unlikely in this environment. There is chatter from Fed officials that they expect another 50 bip cut at the November meeting as well. So that means that's going to be continued to be talked more about as we move through October. More and more talk about another 50 basis point cut, and that is going to be fairly positive for the market. The rumor is fairly positive. China stimulus might make its way into Bitcoin. So there is a real stimulus going on in China. I'm just saying it's not going to be sustainable, but some of that stimulus might leak into Bitcoin because, one of the biggest factors over there in China is capital flight. And what's going to happen when you do all this stimulus? People are going to look for ways to get their newfound stimulus out of the country. So Bitcoin could really benefit from that. And we are right on time. We were right on time with the deflationary spiral from the halving. So all of these things add up to a rally this month. Okay, so that's all for price. Let's keep going. Headlines for the mining sector. Swan Bitcoin claims ex-employees stole its mining business at Tether's direction. I just have a clip here. The link is archived from CoinDesk. So this is from that article. Swan Bitcoin has filed suit against a group of former employees and consultants, alleging they, quote, hatched and executed a rain and hellfire plan to steal its lucrative Bitcoin mining business with the help of Tether, Swan Bitcoin's one-time ally and fundraising partner. The lawsuit accuses 6 employees of looting Swan's trading secrets. Ooh, their trading secrets, including highly proprietary code, hash rate optimization techniques, and financial models, and using them to create an illegal facsimile of Swan's Bitcoin mining operation called Proton Management. And I didn't know that they were called Proton Management. That's what my premium stuff was called for a little while there when I was writing for Bitcoin Magazine Pro. I didn't want to use Pro, so I called them Proton. And that's funny that Swan's mining operation was called Proton Management. After 2 months of pilfering and planning, the lawsuit claims the coup de grace came on August 8th, when they and several other employees resigned nearly simultaneously to join Proton. All right. So I've seen a lot of people jump on this bandwagon here, dissing on Tether. I'm not here to necessarily defend Tether, but I do not think that it's good to be jumping to a conclusion this quickly after a one-sided brief was filed with the court. Okay. I saw a tweet that said, this filing proves this blah, 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 blah bad about Tether. It's just a stupid filing. Okay. Tether can be bad, but so can Swan. There's history here of Corey being a crypto scammer. I'm not saying that he is in this case, but why do you jump to the conclusion? Why do some people jump to the conclusion that Tether is the bad one here? I would lean towards Tether, probably very dedicated to the bottom line, very business-like. They're a multi-billion-dollar company. They're very, very business-like. I'm sure they came in there and said, look, they're a multi-billion-dollar company, people. They weren't there to grind some sort of axe with Corey and Swan. They were there to make money. And they probably looked at the situation and they're like, holy crap, there's something wrong here. Something's not working right in this operation. And we're a third owner of it. We need to fix this. How do we fix this? And yeah, maybe they plan to fix it in a certain way that took control away from Swan. I don't know. But there's a lot more to this story than we know from this filing, one-sided filing. I remember when Swan announced this mining effort, and it was kind of odd to me at the time. In hindsight, it was not a great fit. So, yeah, just even from the beginning, this mining thing didn't really fit with Swan. and fit with the people at Swan that I knew about. And so, anyway, I'm open to being proven wrong, but I bet Tether's role was simply a concerned large investor. They might have honestly thought there was a more profitable action or business plan, whatever. Okay, so that's it for that. Let's talk about Bhutan. So, Bhutan is in the news again. They're mining, making millions on Bitcoin. Bhutan is currently generating anywhere from between 55 BTC and 75 BTC every week from its mining operations. So I just looked up some quick stats. Their population is 727,000, not even a million people in Bhutan, and their GDP is 2.7 billion. So if we use this low end here of 55 Bitcoins at the current price, it means their mining income is 7% of GDP. Wow, guys. 7% of GDP at the low end right now at today's prices. What happens when price doubles? It automatically becomes 14% of their GDP. This is a crazy number to me. Crazy high number. And I just give you a map to show you where Bhutan is right here. Nepal, Himalayas. So it's a very mountainous country. There's lots of water, obviously hydropower there. And so they can mine for very, very cheap electricity. And they can get, they're signing contracts and stuff with Bitdeer, who is a Jihan Wu from Bitmain, his company. And now he's getting hooked up with Bhutan. So very interesting story. We will be watching that. I might do a geopolitical analysis on Bhutan because I think it would be interesting to know more about the country, just like I did with El Salvador when they had their Bitcoin stuff. I think it would be interesting for people to see one on Bhutan. All right, let's go into hash rate and difficulty. Bitcoin's difficulty adjusted downward this week by 4.6%, is currently on track for another 2.5% adjustment in 9 days, negative 2.5%. All right, let's take a look at this. Pink is the difficulty. You can see it went up 3.5% here to new all-time high difficulty. Immediately on that increase, hash rate came down. You can see this is like daily hash rate, I guess. And that can't be measured. It has to be estimated from the speed of the blocks. But you can see that hash rate really came down right on the day that the difficulty adjusted higher. Recovered, but it has been lower than it had been back here. And so it did drop down. What was it? 4.6%. Yeah, 4.6% here. And now hash rate is starting to recover a little bit. Maybe with the most recent price action going higher, some miners are starting to come back on. Not sure. That's what's going on with hash rate difficulty. Mempool is up slightly on the week, over 100 megabytes to 106. Fees remain very cheap. Lost. Okay, this, man, oh man. I had to correct that. So 1 to 2 sats per virtual byte. Let's just take a look at this. Pink is 1 to 2 sats per virtual byte. Then this purple is 3 to 4. You see very, very low fees here. Started chewing through them actually back here. Have kind of come back, the very cheap transactions, but really nothing at all significant to report on the mempool over the last 2 months. I mean, okay, so this is September. This is August. So we have to go back to July to see any sort of activity, like anything interesting. Since then, since halfway through July, it's just been down the whole time. Very, very interesting. Okay, layer 2. Then I'll take a look at comments, and then we can head out for the evening. Polymarket has grown in popularity in the last year. It is a prediction site where you can use quote-unquote crypto. It is currently not officially serving U.S. customers. Now there is a Lightning Network alternative called PredYX. Predix. I was trying to figure out what that stood for. Predicts. Okay. So this is very interesting development. Somebody dropped it in Telegram. So let's just click through here and see this. Do. Are you coming up, man? What's your deal? Okay. Let's. Oh, there we go. Man, that took a while. You can see their markets here. So they have like Trump winning the 2024 election, Chiefs win the Super Bowl. I mean, there's probably very low liquidity. Like this is 12,000 sats. This is 207,000 sats. So some of these markets are going to be very illiquid, some more liquid than others. But for right now, this is kind of a inside Bitcoin sort of website, getting just mainly Bitcoiners, building community like I talked about before. Okay, so check that out. And back to the report. And in case you missed it, here's all my content I put out last week. I have gotten good reviews here on my Forbes article. It talks about the Q4 setup for Bitcoin, record ETF performance, and powerful tailwinds. People are saying it's making them bullish. So read that, send it to some normie friends, maybe your brother, sister, parents, aunt and uncle, whatever. And this is a good article to send them about what's about to happen with Bitcoin, and you guys can see that other stuff. So, all right, let me check comments. I'll go back up to the top here, and I will check comments. See what's going on, if anything. Okay, Facey McFace said he heard payouts are happening this week. That 12 billion could drive the price up or down. Okay. I mean, that's a great point. Because if it's 12 billion cash, you could short Bitcoin, and that would be effectively selling Bitcoin. So yes, the 12 billion could push price down. But we don't really talk about that. Maybe we should, but we don't really talk about that because we think of these people getting their money back and replacing the assets that they had, which were Bitcoin or the quote unquote crypto. So that is a great point. Now, I don't know about when the payouts are happening. We just talked about this. I shared this tweet here and talking about that's false info. I know there's October 7th planned hearing where they're going to do the final voting. So it's not happening until October 7th. I'm fairly confident on that one, 90% confident there. Then there's all these estimations of these claims being bought by claims people, and they're not crypto. So this is kind of a assumption. This is an assumption. So, but this at least balances out those people are saying, oh, October 1st, though that's when these distributions start. No, that is not the case. It is at least after October 7th, and it will probably take throughout the remaining year. So I'm thinking through the end of this year, we'll slowly get these distributions going out in different tranches, right? So that's what I'm seeing for that. A great point on it could drive the price down. We don't talk about that enough. All right. Let me just double check, see if there's any other comments. Nope, that's it for today, guys, then. Thanks for joining me. Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com, most comprehensive newsletter in Bitcoin, covering all different aspects of the space. Bitcoin, macro, price, mining, layer 2. All right, guys. See ya on the flip side. Bye.